Hi, my name is Cort Gwon from HudsonView Capital. Welcome to this week's Wall Street Lingo. Today we're going to talk about the term earnings. You'll hear a lot these days about companies releasing their earnings. Well, we're going to talk about what it means to an investor. Earnings basically, and rather simply, are the profits of a company. A company gets sales, right? And then they deduct their costs, and what's left over are the profits of the company, otherwise known as earnings. Wall Street likes to look at earnings on a per share basis. You'll hear a company making 50 cents a share, 30 cents a share. Basically, they take the dollar amount of profits, let's call it $5 million, and divide it by the shares outstanding. Let's say there are 10 million shares. So $5 million divided by 10 million shares is 50 cents per share. So that's how Wall Street announces their earnings. We are in the middle right now of earnings announcement season. And what that is companies announcing to investors and to the public how well they did last quarter, the last quarter ending June 30. So they're announcing how good their profits were last quarter, as well as what they think about the upcoming quarter. And that's important to investors because stocks trade on future earnings or future expectations of earnings. So if a company has very good earnings right now, chances are investors will think that they're going to have good earnings in the future, and thus the stocks will go up. If a company does not announce good earnings now, their prospects of good earnings the next quarter are not that good, so the stocks would move down. So that's why earnings are important, is because stocks, through what is known as the PE ratio, that's the price to earnings ratio, stocks move on a PE ratio based on the earnings announcements. So this is the second week of earnings announcements. The first week usually kicks off with Alcoa. Alcoa traditionally is the first U.S. company to announce earnings, and after that, every public company will announce their earnings for the quarter. Then, after about 2 months, there's sort of the quiet period or the pre-announcement period, and then in 3 months, we'll start the next earnings period. And so that's why earnings are very, very important to the stock market. The stock market does trade on macroeconomic news like jobs, like inflation, but what's most important are corporate earnings. My name is Cort Gwon. This has been Wall Street Lingo.